Hi everybody, welcome back to the afternoon session. Great to see so many of you here. I hope everyone's had a really good lunch. I certainly did. You must try one of the crosstown donuts which we've got in the Revo networking lounge. Oh my goodness, I really know that I've eaten one of those. It was so delicious. It's now my great pleasure to introduce our Futurist Insight work, which for those of you who were here this morning, you will have heard me mention and Oliver Shah mention as well. Developed by Trajectory, it's called The Forces Driving Retail and Leisure Places in 2034. So this insight, it considers the investment, development and management challenges and opportunities of the future. So it's very much casting forward to what the future might be. It presents a new perspective on the plausible, possible futures for the UK retail and leisure property industry as at 2034. Tom Johnson, the Managing Director of Trajectory, will highlight the findings of that insight and then lead a debate. As you can see, it's all set up for the discussion that follows, with industry leaders who bring a fantastic range of perspectives from right the way across our industry. And then later in the year, Revo will be publishing the full detailed report. So you're getting it hot off the press here. In order to allow for the most discussion up here, we won't be taking Q&A after this, but all of our panelists can be found at our cocktail reception, which happens at the end of the event this afternoon. So if you stay for this and you stay for the next event, then you'll absolutely be ushered up to our cocktails, and then absolutely you can ask the questions you want. So I would now like to welcome onto the stage Tom and all our panelists, and then it'll be over to you.
We thank you so much, Vivian, for that introduction, and thank you all for being here this afternoon. Really excited to share this insight with you. I'm really keen to get the views of our panel on these scenarios. Before we do, I've got a little bit of a presentation for you. First of all, to introduce the work that we've done, tell you a little bit about scenario planning, what it is, and why we think it's such a useful tool for exploring the longer term, and also to tell you a little bit about those scenarios themselves. So, scenario planning is one of the futures techniques that we at Trajectory use more often than any other. It's an incredibly useful tool for thinking through different possible, plausible future landscapes that we might end up inhabiting. It's a technique with a long and pretty storied history as well. There we go. It was actually first developed by the US military in the Cold War. They were sort of using it in war gaming exercises, trying to understand what moves they should make, what moves the opposition might make. Lots of different ins and outs and uncertainties going on at that time. And it didn't take very long for the world of business and consulting to recognize the power of scenarios for thinking through that kind of uncertainty, for plotting a course through uncertain times, pioneered by Shell in particular in the 70s and 80s. Now, one of the distinctive things about scenarios is that in a world and in an industry in particular that has an awful lot of data in it, I don't have a lot of data to show you today. It's not really the kind of point of scenarios. Scenarios are more stories, narratives, descriptions of the future painted with relatively broad brushstrokes, but ones that help us think through the possible, plausible implications of change. At this point, it's really important to say that we didn't do this on our own. And in fact, I should extend at this point something of a heartfelt thank you to the dozens and dozens of people who have helped us in this endeavour. That includes the Revo board and the Revo team, as well as lots of people who'll be in the room and in the conference today in the Revo membership who've given their time and their expertise to this project. And also plenty of people who won't be here either. We spoke to a huge number of people from outside retail and leisure real estate, in sustainability, in infrastructure, in tech, hospitality, culture, tourism, to get their perspective on the future in both business and in academia. Now, this process has been 5 steps in the making, in about 4 or 5 months as well, starting with a process of horizon scanning, thinking through early signals of change and different trends. That was supported by consultation with external experts. We then, at the end of that stage, had a very long list of trends. The Revo board will attest here that it was a very long list of trends indeed. And our job from that is to try and start making sense of it. So we rated each of those trends in that long list on 2 criteria. Firstly, how likely that trend or that factor would be to happen in a 10-year period. And secondly, the impact if it did happen. From that, we can start to identify different kinds of scenarios for the future. And at that point, we went to the Revo membership. They were tested and iterated, pulled apart and put back together again. And we've developed some very full narratives indeed, about 15,000 words of full narrative. I did ask if I could read out the whole thing to you this afternoon, but was told that that would take us into cocktail hour. So obviously, I'm not going to do that. We're just going to talk about some key highlights. There are 3 scenarios that we want to talk about, 3 different stories, 3 different versions of 2034. Each of them contain a degree of uncertainty, but we think that our first scenario, the next normal, is probably the one that is most likely to happen over the next 10 years and take us to 2034. That's the sort of kind of core expectation. But there are still 2 other, what we would call wildcard scenarios, less likely, but still possible, which are well worth paying attention to, well within the realms of possibility. They are rescuing retail and leisure in a more polarised Britain, which is exactly as cheery as it sounds, and green, good, smart places, which is exactly as cheery as it sounds. So, the next normal first of all. Now, from the perspective of 2034, in 3 forces, above all others, over the last decade, have shaped the landscape of retail and leisure. First of all, a relatively stable political climate. In this scenario, Labour win the next election pretty comfortably, remain an effective and pretty agile government. And crucially for the sector, their manifesto pledges, their core policies are ones deemed to be beneficial, particularly for towns and for high streets. We also see a major role in this scenario for AI and automation, with more and more businesses adopting the technology, putting it to work in their practices, using it to drive efficiencies, to increase the capability of targeting. Massive benefits coming from the adoption of AI. And finally, a major force, the impacts of climate change, are everywhere and they are immense. They're causing challenges for businesses of all shapes and sizes in terms of extreme weather. So, of course, flooding, we've had a taste of that this week, I think, but flooding and extreme storms in the winter, extreme periods of heat, particularly in urban areas in the summer, causing disruption to trading, business continuity, resulting in a massive effort to try and update and adapt properties, a lot of which isn't happening as quickly as it should be because of the cost of doing so. Energy resilience itself is a major challenge in this scenario. And in this landscape, in this next normal, retail and leisure is a mix in a couple of ways. A mix of the old and the new, because some places are really keeping up with the changes that are necessary, and also a mix of uses, because pure play retail is less. Those portfolios have evolved. More and more places represent a mix of different uses. And there is some data on this slide that we can show you from our friends at CACI. I think reflecting that change in the prominence of retail overall. So CACI estimate that at the moment, about 46% of retail spaces are overspaced, and that by 2034, the demand for retail space per person will decrease further by 7.4%. Now, a little bit more in terms of what's happening in the background. I'll move on and talk a little bit more about the landscape of retail and leisure in a second. But firstly, some of that stuff that's really kind of happening in the background and creating this environment for retail and leisure in this next normal. First of all, that political stability has created the backdrop for steady, if somewhat unspectacular, economic growth over the past decade. So growth on average at about 1.5–2%, and pretty good based on what we've had in recent years, but not spectacular by historical standards. But helping to add confidence to the sector despite regional inequalities absolutely persisting. What's also helping, though, beyond just economic growth, are political priorities. So the government have been effective in achieving a lot of their ambitions in boosting domestic energy production, in planning reform, in infrastructure development. The UK is starting to do some things right in this scenario, and the benefits are being felt. The world outside the UK absolutely, though, remains very volatile. The population is changing too, of course. In this scenario, we'll be about 2 million more people in the UK in 2034, and I'm sorry to say that we're all getting older too. We have some more population pyramids here from CACI. Some really interesting shifts in these population pyramids. If you look at 2034, one of the immediate things that jumps out is that there's quite a lot fewer people proportionally in the younger age band, so fewer children, fewer teenagers, more people in their 60s, 70s, 80s, more retirees. So the demographic centre of gravity in the UK drifting upwards. And we're becoming more varied as a population as well. Immigration is one driver of that, but also age is part of that too. In 10 years' time, Generation Alpha, who are currently children, the oldest of them is about 14, will be well into adulthood by this point, working, completing education, consuming, and doing the very good work of making Generation Z feel old, which frankly can't happen too soon, speaking as a millennial who increasingly feels quite old. So, in this scenario, what is happening to the landscape of retail and leisure? Well, a few things, directly as a result of those major forces that I mentioned earlier on in climate, in politics, and in technology. On climate, I think it's really hard to understate the importance of the change here. More extreme weather, more often, means costs being added to balance sheets, a need to adapt businesses and properties to this new climate. We also think that there's going to be a real role for retail and leisure environments as places of public safety, in terms of public health in this landscape, the spaces of shelter. There'll be more emphasis on building in energy generation, particularly in new schemes. And these kinds of factors are going to be more important for investors as well, although we think it's pretty unlikely that given the scale of the adaptations that are required, that the whole of the sector keeps up. Politically, as we've mentioned, possibly a positive decade. Higher rates of house building, leisure and retail are likely to be seen as central to placemaking in those areas. Meaningful business rates reform in this scenario too. So that's helping to build up occupancy, it's helping to build up confidence in this scenario. Still challenges, absolutely, in the wider world, because the volatility that we see outside is going nowhere. And AI too, accelerating processes, leading to efficiencies, ultimately helping, particularly in many retail environments and leisure environments, to free up time for staff who can spend more time with customers. Although we do think that there'll be some pushback in terms of that. We don't see completely staffless spaces in this scenario as the mainstream, certainly. Now, these factors are leading to other changes too. There's a degree of polarization in this scenario, as there are in all of the scenarios. We don't, in any of these scenarios, see everybody kind of on the same page. There will be a big mix. And there is a degree of polarization here from changes to the population, more diverse consumer demands, and demands getting a little bit more intense as well. People wanting more, people wanting better, people wanting faster, that being true in leisure in particular. And one of the impacts that might be having on the sector is placing a real emphasis on community engagement within site management. Really an emphasis there on making sure that you're sort of tapped into the needs and the dynamics of a local population as things get more fragmented. That's helping to make places more purposeful and more dynamic. As mixed use dominates in this scenario, retail is often second or even third as part of the mix, and things changing quicker all the time, so a changing profile of occupier. We also think that relationships are going to be changing quite a lot in this scenario too. The kind of old-fashioned, Oliver Shah used the word feudal earlier, relationship, that kind of landlord and tenant model, absolutely updating into something more collegiate. Owners and developers having to think about new relationships with a broader range of occupiers, and local authorities very much in the mix as well. Now, I'm very keen, I'm sure you are too, to get the views of our panel on all of this. But just before we do, a few just key things to remember from this scenario. Firstly, a benign political backdrop means the sector can plan for the long term. I think my mic's gone. Should I just project? Pure retail portfolio evolving into a much more mixed-use offer. Investor confidence building, not uniformly across the UK though. I think there'll be some variations here between in terms of region, in terms of the mixed use as well. Retail and leisure spaces as something of a frontier in the climate crisis as well, playing that role, and polarisation and fragmentation within the population, meaning that tracking and understanding changing local dynamics, absolutely essential to thriving spaces. Okay, quite a lot to get through there, but I'm really keen to get the views of you four gentlemen. Sam, starting with you first of all, you've got obviously recent first-hand experience of completing a major project 10 years in the making, thinking 10 years into the future. Based on your experiences and thinking about the audience, how should people think about navigating the next decade?
Absolutely. I think, well, first of all, 10 years is not a very long period of time. It really isn't. I look at some of the pictures of myself with far less grey hair when I started dealing with Battersea Power Station back in 2015. And needless to say, 10 years flies by, and what is a dead cert in 10 years is that change will happen. Change is an inevitable thing, and it's actually quite a good thing. And in preparation for today, I dusted off our old business plan, our leasing models, all of our target tenant lists and brand targets from back in 2015. And we did a quick sums. 50% are either not in business or you would not be working with or transacting with today, or will not be viable to put into a new scheme. And that just shows the scale of change in an industry in 10 years. I think the other thing is what we had pinned some assumptions on from a funding perspective, from a lease model structure, from a revenue positioning. All of those things have changed fundamentally. So how to navigate, it would be taking people on the journey. That's exactly what we had to do. There are a couple of key things. The power station, Battersea Power Station, would not have happened without the support and commitment of very patient capital and committed shareholders. Taking them on that journey and the big structural fundamental changes in retail was crucial. Understanding the P&Ls and the business models of those target occupiers and brands that we wanted to work with, absolutely fundamental. But increasingly making a change to our assumptions, looking at much more revenue share-based backgrounds and navigating those pieces. I mean, just a couple of other things to throw into that. 10 years ago, Deliveroo, Uber Eats, all of those things weren't really in existence. They were in their infancy. That's now a fundamental part of people's business models. So to try and project what's going to happen, how that's going to change how you do business, no one's got a crystal ball, and I think this is a really fascinating piece of research. But I would navigate it in a way of taking people on the journey and really getting to understand your customer using as much data that is available and predicting where you can.
And is it a case of adapting as much as it is of predicting?
I think adapting is, I think it's pivoting is probably a good word. If you look at how sectors change or industries evolving, trends changing, having the ability to pivot, flex up, flex down, change the proportion, for example, of how much hospitality versus retail versus fashion versus, department stores. We were looking at bringing a department store into the power station. That was back in 2015. That wouldn't have happened now, and certainly didn't happen. But it's pivoting, I think, is a really key part.
Really good. Thank you, Sam. Ojay, I'm going to come to you next, and thinking particularly about local authorities, those in the public sector. What are the challenges, what are the opportunities in this next normal for that audience?
Okay, so hi everybody. So Association of Town and City Management, happy, sometimes unhappy collection of placemakers, multi-sector, but the majority are local authorities. So in terms of what this looks like for them, I mean, overall the scenario sounds like it's slightly positive, but for a lot of people it's going to be really just keeping your head above water. And to be honest, Tom, given the economic shock after economic shock we've had since the turn of the century, I'll take it now. So long as we know what's coming and there's some stability. If you were Noel Edmonds, I'd be shaking your hand. Its deal is definitely not no deal. So I think that stability is important. For our local authorities, when we talk about them just keeping their heads above water, there's a number of things we're going to have to take into account which local authorities face. I think they are critical in terms of investing in a retail destination, whether it's high street, town centre, etc., or the public realm, transport infrastructure, etc., etc. There's lots a local authority needs to be involved in. But we know that one of the biggest challenges they have are the financial aspects of delivering public services. Possibly the biggest issue, which probably underlines a lot of what we need to think about when it comes to infrastructure, public realm, etc., is the fact that we have an aging population, and that demographic change, especially through our health budgets and things like adult social care, is just sucking all the investment away from things like economic development. And I think that is going to continue to be a drain on local authorities into the long term, especially by 2034. You talk about climate crisis, absolutely right. I think this is a significant issue, and I think where this sort of comes together with the challenges we have around public health is, as we become older, we are also going to be more exposed to things like extreme weather and climate change, so it makes that impact even worse. It's going to be really difficult for us to navigate. However, in this scenario, you talk about if this current government can get some of the things done it would like to get done, I think one of the biggest things in there is business rates reform. Yeah. In this audience, with this group, we always talk about the importance of business rates reform in the context of the private sector. Make no mistake, it's also, I think, just as important to local authorities as well. Having the tax that we have that is archaic, that for me is maybe not the primary cause, but certainly not helping the amount of insolvencies we've seen on the high street. I think being able to have a level playing field creates a more stable tax, of which local authorities are ultimately the beneficiary, because that provides a lot of the money they need for public services. And the other point as well, in terms of the new government, one of the things they want to look at is multi-year settlements for local authorities in terms of their budgets. So more stability as well in terms of understanding what their investment might look like in the longer term.
Thank you very much, Ojay. Michael, going to come to you next. Your assets typically in mid-sized town centres or away from the city centres aren't the big shiny new developments. What does this scenario mean for you and the assets that you look after?
Well, I suppose in terms of reiterating what Sam has said, I don't think there's any prescriptive answer to it, and every location is different, every asset's different, and geographically, the assets that we work with are in the north of England at the moment, and they have their own challenges that maybe are different to assets in the south of England. So again, not to be prescriptive, but in your scenario of looks like a relatively positive 10 years and stable 10 years, what I hope to think would be the case, and what we've been seeing, is that, as you've said yourself, a reduction in retail space, where there's an over-provision of that in most towns that we're involved in. So yeah, I mean, look, reduction in space, the things that everybody knows about and have been sort of striving towards replacing some redundant retail space with categories such as resi, whether that's student accommodation in a big enough town, build to rent, build to sell, senior living, trying to bring people back into the town centres, leisure and F&B, people's habits changing, Gen Z and Gen A, looking to maybe have more experiences, eat out a little bit more, enjoy the town centres that they live in the areas that we work. Oliver earlier on this morning talked about offices, and obviously that sector is going through a difficult time at the minute, but I think there is a place for that in town centres when you're repurposing and repositioning assets, if it's the right class and if it's the right size of offering, as people maybe try and strive for a better work-life balance in that 10-year period. Public realm and the importance of that, and an event space that Ojay mentioned, and how that can benefit people's health and mental health and bring them out and enhance dwell time, and things like more independence. We'd hope we'd see more pride in town centres, a greater sense of community and social value, and people wanting a point of difference as opposed to where we've come from over the last 30 years of retail, or where it's been 80s, 90s, and every high street relatively looking the same. And things like covered malls and the removal of covered malls and unpicking old assets that were built in those generations and then added on to, and that sort of feeds into the social, environmental thing of ESG targets and not having to heat these big spaces, not having large service charges that then you have to pass on to tenants, so you're sort of bringing down their barriers to entry. And then the final thing I think is important, back to on a positive side in terms of the government's role or local council's role is more policy around driving public services back into the town centres, freeing up sites on the peripheral locations that can provide housing and hit that target as well. But those uses are great for investors. There's long-term income, there's something that somebody can invest in, and it's important again for the social sort of side and the community health of the town centres. The challenges I see, just to sort of on the more negative side of things, and knowing from the assets that we've worked on, are, who pays for this stuff? Who has an appetite to pay for this stuff? How investable is it, unless you're sort of buying it for a song, really, because a lot of these assets are so old. There's EPC targets or ESG sort of targets, and people want to move to net zero, but how do you repurpose these assets, and who pays for it? So that's, I suppose, a question from me. And then the last critical thing, I think it was mentioned previously there, was just the fear or sort of the threat of not bringing the community along with you, to sort of selling the dream to the local community, because you have people who do hanker after, the Wilco's on the high street or whoever it may be, and things are changing and they can't leave the community behind. So this community engagement piece is all important, and that will be critical in the next 10 years, I think.
Thanks so much, Michael. I think you covered some really important issues there. Before we move on to our next scenario, Chris, keen to come to you. Obviously, you work across Europe. And based on what you've seen, are this future, these challenges and opportunities, are they unique to the UK? Do you see them replicated elsewhere? What's your perspective?
Yeah, thanks, Tom. So look, I think from a European point of view, so the UK is perceived quite well and quite credibly when it comes to, this is a topic, but we're also perceived quite consistently. So just to explain, I asset manage and head up the team in the UK, but Redevco is a pan-European platform. We're in a countries across Europe, and the money that we represent is increasingly coming from further afield. So this is very much what's the outlook for investing and holding real estate, not only in Europe, but obviously in our case in the UK. And we're across sectors, so we're a pretty broad church. I don't think we own any churches, but we do own resale warehousing, residential development, and operating businesses in Amsterdam. And people know us really for big town centre asset management of mainly retail-led but mixed-use property. So I think there is an expectation on us as an industry to think forward. Both us as real estate advisors in that across Europe, but everybody in the room as part of the real estate industry. You've got to have a clear expectation about where you're heading if you're going to advise anybody on what to do. And that is the consistent question across Europe and across sector. Where do I invest? What do I buy? What's the right point in investing cycles to look at? What does the future look like? And you've got to be able to articulate what we're talking about. So this kind of research is invaluable because I think there's an onus on all of us to think in that way. The pleasing thing, I think, in this, less so in the slightly poorer outlook, but absolutely as we look ahead to the better outlook, is all of those scenarios are plausible. And I think it's because if you look in the environment that we're in today, the kind of bones of everything is there. You've got a huge legislative stick to beat everybody with. So whether it's CSRD reporting kicking in next year, in the UK we've now got the England and Wales, we've got Building Safety Act. EPCs, I think somebody mentioned that, minimum requirements now and stepping up into the future. Biodiversity net gain, you name it, and there's a load more. There's a lot of legislative structure that's putting pressure on us to up our game. The positive thing is I think we're at this point in the market, and that's not only UK and in Europe, where being a force for good, which is very much what we like to think of ourselves, and creating social value, bringing communities with you in what you're doing, is colliding very well with that legislative environment, but with the kind of traditional views of value. So this idea of brownfield discounts or green premiums, the idea that if you do think about ESG properly, if you do think about the future properly, there's a better occupier market for you. There's probably a better rental value for you, or at least some consistency of that income, and that translates into capital value. So when you can combine doing good stuff, which is what we're supposed to be doing and contributing to the global crisis in a positive way, with the traditional way of seeing value out of the type of asset and asset class that real estate is, that's brilliant. So the opportunity that's in front of us, combining those two things, is not unique to the UK, and I think that, as I said, that's European-wide, and it's a really good opportunity.
Thank you, Chris. Keen to get on to the next scenario. Before we do, Ojay, you started a game of deal or no deal earlier on. This is a deal you would take, this scenario. It does feel like a bit of a mixed bag. Where are the three of you on this? Is this a scenario that we should welcome? Is it something that we should try and avoid? How positive do you feel about this scenario? Just a brief answer. Sam, we'll start with you.
I think it's a relatively welcome scenario, but I think there's opportunities to outperform this and do better. I think you see the resilience in this sector. And if you wound the clock back even 5 years, people were predicting pretty apocalyptic positions for this industry. And I think if you would take the position today, and I think where we're going, quite happily.
Okay, great. Thank you. Michael, deal or no deal?
Deal. I think, as Sam said, I think it's the stability bit gives you confidence. It's the fact that retail now is looking brighter than it did. I think there needs to be greater collaboration just between developers, private sector, council, local councils, central government. I think that's the missing link, and obviously if there is political stability through the period, but definitely positive towards this scenario.
Fantastic. Chris, last word from you.
I'll take it, yeah. I'd always encourage to aim higher, which we'll come on to. And if we aim higher and end up here, that's going to be a good result.
Yeah, certainly better than what we're moving on to. So I think that core scenario, the next normal, featured a mix, a balance of challenges and opportunities. In this next scenario, it's sort of challenge in abundance, really. In this next version of the future, rescuing retail and leisure in a more polarised Britain, we've seen the landscape of bricks and mortar retail really just narrowly avoid collapse. In this scenario, we've had a lost decade economically in terms of growth, and that's having impacts all across the country. Stagnant incomes, persistently tight public finances, rising inequalities, the gaps between the haves and the have-nots getting wider and wider, and that inequality manifestly visible in the retail and leisure landscape in particular, where you have islands, fantastic, wonderful, brilliant, world-class developments in a handful of places, typically located in major cities, but the environments and the offer on people's doorsteps, on the high street and in lots of town centres across the country is quite a lot worse than that. Town centres being hollowed out, persistent decay and decline. And we imagine things get so bad in this scenario that it feels plausible that the government would be forced to act, to step in, and that by the early 2030s, by around the time that this scenario is kind of describing the world, the government is sufficiently worried about both social cohesion and economic stability and launches a major programme of urban renewal, bailing out local authorities, looking to partner with developers, providing funding, grants and incentives for businesses that can commit to a presence in regeneration and in abandoned town centres. I think one of the ways to think about this kind of policy is if GB Energy is the kind of flagship policy at the moment, there may be something akin to GB Towns as its sort of 2030 equivalent. Now, the background of this scenario is in some ways very, very different to the background of the next normal in terms of what's sort of situated at that kind of backdrop. There's much less progress, there's much more volatility, and volatility right on our doorstep. One thing hasn't changed, because it can't change in this period, is the climate crisis. The same implications, the same manifestations, the same severe impacts of extreme weather and a changing climate. But what is really different in this scenario is the public support has gone. They are not buying it. They are not prepared to meet the costs and the disruption of the transition. Labour, we think, are still in power, but probably only just a much weaker second term for the party, a less powerful, a less effective government. And in this kind of economic backdrop as well, we think its ambitions for power will have been severely curtailed. So less success in terms of planning and building, less growth, meaning less money, public services and infrastructure in particular. And perhaps unsurprisingly, in that climate, the population are pretty unhappy. In this scenario, it is an angrier, a more marginalised, a more disenfranchised population. And that is visible in town centres and high streets and retail and leisure environments just as much as it is anywhere else. Public disorder, vandalism, crime, poverty are rife in those environments. Cheery, isn't it? So, a lost decade and an angry decade, and that is going to mean all sorts of different manifestations and different implications. It means little investment in energy systems, little investment in infrastructure, including transport infrastructure. Things are really starting to break down in society in this scenario. The public increasingly disenfranchised, increasingly angry. There's a powerful sort of streak of anti-green and anti-woke sentiment, not a fringe thing at all, really quite a mainstream sort of ideas. Clearly, not a one-size-fits-all. Polarization is kind of writ large in this scenario. People are polarized, and places are too, as we've sort of talked about already. You have in this scenario these islands of world-class, brilliant offers, but not much going on other than decay and decline in most town centres and most high streets. We think it's feasible that in this scenario there would be some glimmers of hope, some organic kind of community-led renewal, maybe some places that sort of thrive under, become hubs for kind of culture and art, but pretty piecemeal. The offer for most people is pretty poor. And unsurprisingly, in that context, in this scenario, people are staying at home and turning to online for both retail and leisure. And that's only contributing to something of a vicious cycle for town centres and high streets, trapped in this cycle of low footfall, rising vacancies, lower investment as well. And it's being felt throughout the sector. No one escapes this one. Every part of the supply chain encountering weakening demand, from sort of trades and suppliers through to architects, engineers. As communities decline as well, as vacancies proliferate, investor confidence we think is going to be evaporating here. Possibly a presence for more opportunistic, maybe shorter-term investors, but that's going to come, we think, in this scenario with less of an appetite for investment in renewal and the kind of adaptations that are necessary, particularly given opportunities from technology and challenges from climate. And I'm slightly reminded of sort of Ronald Reagan's scariest 9 words in the English language here. I'm from the government and I'm here to help. In this climate, government is forced to launch this kind of GB Towns policy of urban renewal. And finally, funding is available to try and reverse the kind of decline and decay that has been pervasive over the previous sort of best part of 10 years. But even that isn't a panacea in this scenario at all. It comes with strings around net zero, around sustainability, around energy regeneration, which are proving incredibly divisive in this angry population where, frankly, that argument has been lost. So, just a few key takeaways from this scenario before we go back to our panel. First of all, this is a sector in decline in this scenario, and really the whole kind of sector, every link in the chain really being focused on quite a narrow band of successful developments. Retail, a front in the culture, in the climate, in terms of climate change in the next normal. In this one, it would be a front in the culture wars. Spaces being targets for protests and public disorder. Short-termism, absolutely there in terms of the investor profile, in terms of the investor mindset. Ultimately, ultimately retail spaces being less embedded in the communities that they might be able to serve, more distant from them. And finally, I think a really limited landscape of innovation in this scenario. Less appetite to try new things, less appetite to push the envelope, low risk, no exploration. So, cheery scenario. Going back to our panel, Ojay, you get the opportunity to be prophet of doom on this one. This is a scenario in which towns, above all, are struggling. If this scenario did happen, I think we probably all hope it doesn't, what would your members be most concerned about? What challenges would they face?
Oh, goodness grief. Noel, it's a no deal from me, thank you.
Yep,
I'd like
it might be.
to move on. I think in terms of some of the challenges, I think some of which you've sort of outlined, firstly, it's the spiral of decline, which in itself is really difficult, because how do you get out of that spiral? Poor economy, less growth, higher taxes, less investment, poorer economy, rinse, repeat. And I think that's why you talk about, in terms of that, looking at what might come, should we have this scenario, a big intervention like GB Towns then becomes a possibility, because we need to break the cycle. Polarization in different forms. So, city centres probably not treated the same as some town centres, north-south divide, challenges with coastal areas, etc. Polarization in terms of the performance of different towns, polarization also in terms of the population and societal issues. We've seen a glimpse of that this summer, and the way social media is really starting to create these echo chambers, and you've got people sort of at the margins sort of against each other. I think if we have that long-term decline, then I do think we start to feel that in a more significant way. In this scenario, I think one of the things our members would be concerned about is we've probably lost the race against, not against technology, but the race to use technology for
We're behind the curve, for sure.
We're behind the curve, and in this scenario, I think, a certain Brazilian rainforest has probably won this race. At something like AI, it is not something which is out there to destroy high street retail or our retail destinations of bricks and mortar. It just is, it's a tool, and either we embrace it and use it for purposes which help us with our businesses, with our industry, or we will lose that race against those who are already using these tools. I know there are online giants out there already well adept in terms of using AI. So I see us having lost that battle. And because of the challenges we've got now in terms of high vacancies in some places when it comes to bricks and mortar, I would foresee in this scenario a mass loss of commercial space to maybe something like residential. It would be inevitable. If you've got a housing supply crisis and you've got commercial property you just can't do anything with, then I think you may see some town centres just stop being commercial destinations, and will use a lot of that property for residential purposes as well instead. I think the role of local government in terms of economic development will almost have entirely disappeared. The money just will not be there. I think it probably extends to other services as well, other things around supporting communities which could store up long-term challenges around crime, antisocial behaviour, and those other important interventions which our public services are there for. Local government might just be reduced to burying dead people and collecting your bins, and under this scenario, it's probably it. There's going to be a bigger role for business improvement districts out there, but I think it's only going to be in the towns where there is some resemblance of retail businesses to sustain those bids. So even then, you're probably talking about less bids than what we have now. And I think because we've not got to grips in terms of investment to meet the challenges of the climate crisis and resilience, we'll also have all sorts of problems from the impact of the weather as well. And one of those knock-on impacts, because of the impact of climate change on things like food production, it will be high inflation. It will be challenges to household budget, and that again has a knock-on impact on our retail destinations in terms of spend.
Contributing to all of these challenges that people are facing.
Yeah.
Thank you, Ojay. Michael, going to you next. I mean, you talk in your work about bringing the heart back to high streets. How do you do that in this context when the challenge is just so great as we see in this scenario?
Well, it's not too dissimilar to how I finished the previous answer, and I think it's greater collaboration between the private sector and the public sector. But I suppose before wondering where the money is going to come from and how the government and the council is going to intervene from a financial perspective, I think it has to look at, what strategy is there? Is there a clear and defined strategy for readdressing the position that this potentially proposes or assumes in 2034? So I would be looking at, like an engagement exercise, have a vision, have a strategy, outline it, define it, and sell it to the local community. I suppose the issue with that is that sometimes when local councils get involved in that, it can take a long time. And as you said earlier, Sam, by the time you get to the actually delivery, it's all changed anyway. But I think starting there, I was looking more from the perspective of, yes, what could they do if the coffers are bare? How could government and local council address these issues? And looking at things like bids, I wonder, is the bid concept the wrong way around? Could we be looking at drawing a red line around certain areas of town centres or parts of cities or wherever it is where private business is incentivised to invest in those areas? So rather than a rates levy for people within a bid area to pay for management services, then maybe you get a business rates cut. Maybe there's stamp duty savings for buying property in those areas. Maybe there's tax offsets against modernisation of the properties that you feel that the government feel and we can all agree are the right properties to maintain at the right level. So sort of switching that around, possibly levying other schemes or, housing schemes out of town centres, large out of town centres, commercial centres where they're very car reliant. Further, if there is money, further investment in public sector or sector transport, and again back to that piece about making sure that if there are services that are becoming, no longer fit for purpose, GP surgeries, whatever it may be, social care facilities, nurseries, in the next 10 years, they should be going into the town centres. There should be prioritisation on that.
So sorry, just to cut in there, so collaboration absolutely key and a real role for government. It means
and even planning. The last one was planning. Is there a fast track for those schemes for people who are investing and willing to invest in those town centres? Can those applications be fast tracked?
Thank you. Chris, moving on to you next and thinking a little bit about the big question, where does the money kind of come from in this scenario? Would you expect international capital to be withdrawn in this scenario, an opportunity for more opportunistic investment? What do you think in this scenario?
So I'll be quick. So investment breeds investment, and the opposite is true.
Yeah.
You create an environment that people can buy into, both in terms of stability, we talked about that quite a lot, but also ambition. And that's where you build your business plan from and then try and outperform it. That is actually opportunist investment. This idea of opportunist in taking advantage of a situation, that is kind of what we do, but we're billing it as a kind of negative output from here, that you're just coming in at a very low base, making some quick turn without really looking out and up and helping out. And that's what you want to try and avoid. And that's really what we're talking about here, is the scenario avoidance. And the real reason for that is we've got to take it quite seriously. I said before, there's plenty of examples in here, as in others, that you can see the bones of right now. I'm very pleased you mentioned it, the summer that we've had from discourse, rioting, impact of social media. These are well beyond the realms of real estate, but they're massive triggers in society, and we're part of it. So you've got to take responsibility, and you have to take stuff like this seriously, because there's a good chance it could happen.
Absolutely. Thank you, Chris. And Sam, just coming to you quickly at the end. Obviously, underwriting a lot of this scenario is economic turmoil, low growth, a really difficult decade again. How do you respond to protect your interest in that scenario? How do you deal with that kind of landscape?
Sure. I mean, as unpalatable as it is, I mean, don't forget, it's not dissimilar to the scenario we were in only a couple of years ago, really, from a pandemic situation in terms of what we were facing. You know, as a developer ourselves, we've got a 42-acre site, millions of square feet. Was the viability of that thing even going to happen? That was the question we were asking ourselves. So I think we've experienced it. I actually think in this scenario, the role of real estate and owners is really important. You would have to step up. And I think it really highlights the importance of single ownership and curation, and where you can really manage an environment. Of course, there's an economic challenge there on our cost, because that's going to cost some money. But bringing people on a journey, telling a story, and engagement is going to be really crucial to navigating this scenario. I mean, 25% of our visitors are super local. We know that engaging with those people all the time tells us that what they value, what they want to see, security and safety is top of the agenda. So how do you then offer that up? You create a model within an estate yourself, and I think that is how I would look to respond to it. Appreciate that is not possible to replicate in all scenarios, but if the ownership doesn't exist as a single piece, I think it's the collaboration of ownerships to ensure that there is a control, and that would be the best way, in my opinion, to manage that scenario. Thank you, Sam. We won't do deal or no deal. I think I know your answers on that one. Final scenario is a bit of a change of pace, really quite different. Green, good, smart places. They are thriving environments, a world away from what we've just seen. They are what consumers want. And in 2034, in this scenario, retail and leisure locations are providing them, and they have had some help from a few different things. A booming economy, absolutely. Huge investment in climate adaptations, and really quite dramatic shifts in technology. This is a tech-driven scenario, really kind of above all else. So the political climate has been stable, a bit like in that first scenario, but Labour's reforms have been even more successful than they could possibly have hoped. I should be delivering this in Liverpool, really, shouldn't I? They love a bit of optimism up there. The impacts of climate change, absolutely everywhere still. That's unchanged across the three scenarios and just as severe. But the difference in this scenario is that the response has been decisive this time. Consumer values have changed as well very quickly, values and behaviour. The success of GB Energy has been beyond anything that Ed Miliband could possibly dream, and has created something like domestic energy security. But most importantly, the last decade has seen genuinely dramatic leaps forward in technology, particularly including the widespread take-up of something called agentic AI, so a step on from generative AI, which we're seeing at the moment, and that is having all sorts of benefits in terms of planning and development, but it's having major changes on the consumer side of things too, driving a complete change in how and where people shop. So, a few things happening in the background here. First of all, the UK is really kind of standing head and shoulders above its international peers in this scenario, outperforming in terms of growth and investment, other G7 nations, a lot of OECD peers. Really, the growth scenario, I think, in this narrative is beyond anything we've seen since before the global financial crisis, at least. And the fruits of that development and that positivity have been channeled into infrastructure, especially energy infrastructure in particular. There's still variation across the population, absolutely, not everyone on exactly the same kind of hymn sheet at all, but the population generally is healthier than it was, and that's helping to change behaviours, and it's greener than it was too. There's really high support for net zero transition and significant changes in behaviour, including lower levels of car ownership.
Now, at the heart of what is differentiating this scenario more than anything else are the dramatic, paradigmatic leaps forward in the capabilities of technology, particularly in terms of AI capabilities and also network capacity to support that. That's helping to provide in built environments, smart city infrastructure, widespread drone delivery in this scenario. And that is changing uses, changing what the built environment means. It means new demands on space as well in terms of repurposing of rooftops and demands for last mile and urban warehousing, that kind of thing. And from the point of view of 2034, the next decade looks just as exciting, moving into the 2040s. Trials of driverless cars and eVTOL, urban air mobility, all happening too. Now, this is all incredibly impactful, all of that stuff that's happening in terms of the built environment. But the biggest change comes from the widespread use of agentic AI, this idea that the consumer population at large would be using these personalized AI agents to do all the things we don't really want to have to do ourselves, all the life management, all of the admin, including quite a lot of purchasing, quite a lot of retail trips. Now, this is accelerating the transformation of retail spaces, with those environments being used increasingly for other things: leisure, hospitality, well-being, and health. And all of that is a virtuous cycle. The UK's investment in infrastructure, the adoption of technology is helping to encourage investment. The transformation is being felt first and most in cities, but is spreading beyond cities to towns across the UK too. Now, new relationships clearly needed in this landscape. Happily, stronger growth and the evolution of retail and leisure environments is creating a benign environment for that to happen, and we see a new, more communicative relationship between owners and occupiers, supporting the net zero transition, working together on placemaking, absolutely with shared interest in terms of staying ahead of the game in technology too, and embedding that into spaces and into assets. Still pockets of deprivation, absolutely. The whole world's problems are not solved in this scenario at all. But generally, we have a consumer population in this scenario that is greener, wealthier, healthier, and more time-rich too. And habits are changing. Less car travel being one of the significant habits that's changing. People spending more time in their local communities and feeling more ownership and identity in terms of their local communities. Happier to pay ethical premiums too. And there are success stories everywhere we look, in towns, in cities, in new and novel types of environment too, where often retail is second or even third. 5 key things before we turn back to our panel and get their final reflections here. So first of all, retail and leisure in this scenario have successfully pivoted towards other uses, and that is building confidence in terms of investors. The changes to behaviours, one of the biggest impacts here is on new demands from space, repurposing of car parks, rooftops, urban warehousing, huge shifts in what we use communities and the environment for. In such a tech-driven scenario, it's also obviously going to be absolutely crucial for investment in upskilling the workforce and training. Transport changes are going to have really big impacts. One potential downside in this scenario will be for out-of-town developments that don't have good existing public transport infrastructure. People are using their cars less. And relationships, I think, are changing in a very positive direction in this scenario too, between owners and occupiers, greater flexibility in leasing, much more openness in terms of data sharing. So, going back to our panel for the last time. Chris, starting with you, I have to move through this relatively quickly, I'm afraid, but there's a lot of opportunity here, a lot of it that relies on both the developments of technology and also getting results out of technology. It's the million-dollar question, I guess, but how can we achieve that?
I've no idea. Well, only because it's pretty cliched, isn't it? Is, you know, making sure technology is a tool, to use your word, familiar, Ojay, rather than and an enabler, I think, is a good thing, rather than getting in the way. So, again, we're in a world where there is a huge amount of prop tech and resource at our fingertips already, and that's right the way through from intelligent investment planning. How we actually construct our buildings. Yeah, we're now running pretty much everything we develop in Belgium, for example, with a digital twin, with BIM systems, when you've actually got a building, then how does it run? So making it really efficient on air quality, on heat control, security, waste management. There's a huge world out there that I think the important thing is to try and embrace it, but it embraces it in the right way, that it becomes the release for us to then concentrate with that free time, with that freed energy on delivering these much better attitudes and these much brighter pictures. So it's really exciting to see that you can see that very much happening, that it becomes such an integrated part of our lives, but the caution that it doesn't become our lives, that it is an enabler to be able to do bigger and better things ourselves.
Fantastic. Thank you, Chris. Michael, going to you next. Another really key feature of this scenario is that evolving relationship between landlord and tenant, owner and occupier, evolving into a true partnership. What would the impact of that be? What kind of impacts would that have?
Well, in terms of, I was looking at tenant and landlord relationships and how that would change in the next 10 years in that scenario. I suppose what we're looking at is maybe trying to look at the Landlord and Tenant Act. It's been around for a long time. It's quite clunky. There's often standoffs between tenants and landlords as to who's going to sort of blink first in terms of, are you going to serve notice on me, or I'm going to serve notice on you, and who's going to pay who? And there's not really maybe that balance that we're striving for in terms of, are we both in this together? We're willing to invest. If you're willing to come on the journey with us, we'll share the risks and we'll share the upsides. So we're maybe looking at a change there, more turnover-based deals, maybe landlord providing more flexible spaces. And again, I'm focusing more on sort of town centre schemes and sort of older schemes where these spaces could be modernised, and then there's not huge barriers of entry to the person who has a dream of coming in and trading in the town centre, maybe shorter term leases, but not to the end. If it doesn't work out, then there's a bit of a churn and somebody else comes in and that space is there and it's ready. And that sort of thing in town centres, I think, is potentially the way I see it, more hub spaces also. So yeah, I think, again, collaboration, back to that, landlords who are not just collecting rent and faceless, that actually understand the community and the offering and willing to talk to the tenants.
Thank you, Michael. Ojay, coming to you next for your perspective. I mean, this is a scenario in which in-town spaces are thriving above all. What role do you see your members having in bringing this about? And I'm really sorry, both Ojay and Sam, I have to go through relatively quickly through your responses.
Yeah, so I think in this particular scenario, our industry has wised up. I think we're working in partnership, we're working together, collaboration, like businesses, bids, local authority officers, councillors, landlords, etc., round the campfire singing "Come Buy Our" together. I mean, I only slightly joke, but we're all together, and it's those strong partnerships, that local governance, that's allowed us to step up and to respond positively to the challenges which appear as almost a common thread through each of these three scenarios: climate, technology, aging population, etc. And because of that, we've been able to get on top of the big issues and turn it around. So now town centres are high streets are thriving. Investment in net zero, climate resilience, health and well-being, active travel, green and blue infrastructure, AI being used as a tool for planning and development, etc., etc.
Thank you, Ojay. And Sam, finally, ending this discussion where we started it, talking about technology. It's a huge part of what's driving this particular version of 2034. Do you see your model of retail as being able to adapt to thrive in this scenario?
Yeah, absolutely. I think it's exciting, really exciting. I think there's lots of opportunities too. But if you look, what are the key themes we just talked about? Well, we've got to decarbonise, so we've got to use less transport. We need to get a more holistic approach between all users. And I think one of the key areas that we're really keen to push at the moment is creating an ecosystem amongst an estate. So why bring in third-party delivery drivers and delivery drivers to serve food to someone that lives above the restaurant, above the shop? Cut down that product mileage, utilise the space. It can play on any scale, big or small, but it's going to take collaboration, big use of technology, and a big use of sharing data. I think we can get there, hopefully, in a lot less than 10 years, but I think there's a big opportunity there to monetize, decarbonize, and get a lot more data and investment and create a better environment.
Thank you very much, and thank you all four of you for your responses. Really close to closing this up, but just before we do, I want to leave you just with 3 key messages from our research. I think these are true regardless of which version of the future we end up getting, whether it's one of the 3 we've talked about or another one entirely. Firstly, retail has to continue to evolve to thrive. There is a fundamental human need to spend time in our communities, in public places, with friends, with family, with neighbours. But meeting that need, core though it is, will require new strategies by the sector, replacing trading space with public realm, developing new relationships, new methods of collaboration. Secondly, government clearly has a huge role to support this transformation. It's incumbent, obviously, on the sector to speak to government with a clear voice about its needs and about its ambitions. And finally, really the kind of thing that doesn't change in any scenario is climate change. It's going to be adding immense challenges to operations and will need to be managed. It's really hard, I think, to understate the impact of this disruption, and the work of managing it will be intense. That is everything from me. Thank you very much. I welcome Vivian back to the stage to close the session.
Well, Tom and all of you, Michael, Chris, Ojay, thank you all very, very much. I think we could have gone on and on. I mean, I started working with futurist work probably 15 years ago in the renewable energy sector, and it really was ideal for trying to navigate through an uncertain environment. We are in uncertain times in so many different ways, and I think that this is a very, very valuable way to be approaching that level of uncertainty. So thank you all once again